One innocent bank deposit can delay your loan, cost you a better rate, or even kill your approval, and most buyers never see it coming. Lenders don't just look at how much money you have, they scrutinize where it came from and how long it's been there. I'm Jermaine, your Arizona realtor, lender, and fellow investor. Let's break down why lenders flag deposits, how seasoning really works, and what you need to do to protect your approval. If you're getting ready to buy a home, your lender is going to ask for 2 months of bank statements, and they're going to review them carefully. But why? Because they're looking to verify that your down payment funds are legit, stable, and properly seasoned. Deposit seasoning means the money has been sitting in your account for at least 60 days. Most loans, FHA, VA, USDA, and conventional, follow the same rule. Lenders want to see 2 full months of clean, traceable funds. Here's where most buyers get tripped up. It's not just about when the money hits your account, it's about when it shows up on your statement. Let's say your statement cuts off on the 15th of every month, and you drop in a deposit on December 18th. That deposit won't appear until your January 15th statement. From there, the 60-day seasoning clock starts, which means the funds won't be fully seasoned and ready to use until March 15th. So what happens if a large deposit shows up right before you apply? It gets flagged, and unless you can prove where it came from, the underwriter might not allow you to use it. Acceptable sources include paychecks, documented gifts, a tax refund, or selling something, like a car, with proof of ownership and sale. You'll need documents for everything. If it's a gift, you'll need a gift letter and proof of transfer. What doesn't work? Cash. If you just walk into a bank and drop in $2,000 with no explanation, it's not usable. Same goes for Zelle, Venmo, or transfers from a friend with no source documentation. Quick question. If your loan approval came down to one flag deposit, would you know how to fix it in time? Let's break down a real situation. A buyer deposited $3,000 cash just 2 weeks before applying. The lender reviewed their statements and couldn't verify the source. The result? That money couldn't be used, and the buyer had to put down less than they'd planned. Because their down payment was lower, they didn't qualify for the better interest rate they were aiming for. The loan still went through, but not with the terms they wanted.
Can you use a gift as a deposit? Can you move money around right before closing?
Now here's the thing. If the funds are already in your account and they don't show up as a new deposit in those last 2 statements, most lenders won't flag it. But if it does show up, they're going to ask where it came from, and you'll need to prove it. The key is, talk to your lender before you move money. Ask before you deposit. And don't assume everything you have in your account will count. Unless it's documented and seasoned, it may not help your approval. If you have any other questions about seasoning your deposits, let's talk. I'm always here to help homeowners and future homeowners like you. Got questions? Call or text me at 480-800-HOME. And don't forget to like, comment, and subscribe for more Arizona real estate tips. Have a nice day.